Tonight, steel manufacturing firm Sentio Steel escaped closure by the Ghana Revenue Authority after paying about 9.2 million cedis to clear its accumulated debt to the state. The debt, which includes penalties on delayed import duties and other taxes, had accumulated for more than 2 years, according to the GRA. Meanwhile, haulage and goods trading company Hippo Transport has been shut down over tax default of 1.3 million cedis. Here's Ebenezer Sabute's report.
Monday operation took the Ghana Revenue Authority to Tema Heavy Industrial Area, where haulage and general goods dealership firms are said to have accumulated a debt of more than 1.3 billion cedis in over 2 years. Several efforts by the authority to reclaim the debt has failed, a situation which led to the closure of the office premises. At Sentio Steel, the company immediately issued a check to offset the debt in order to prevent the action by the task force to close down the company. Here is Senior Principal Revenue Officer of the GRA, Magnus Ajimfra Boatin.
Hippo company owes GRA about 1.3 billion Ghana cedis. Several efforts have been made to retrieve that amount, but to no effort. We have written to them several demand notices, reminders. There has been even meetings for which they give their own arrangement to which the Commissioner General agrees, but at a point in time they default. So we ended up closing the place down when the Commissioner General gave us the warrant to do that. And then secondly, we are now at Sentio Steel Limited. They owe about 9.2 million. Fortunately for us, they have issued a check to cover the entire amount. 9.2. Sorry.
He, however, warned that the necessary sanctions will be applied if it is established that the check is not genuine.
The law will capture. When it bounces, there are procedures we go through. It's another offense, which they are aware. We have told them about it. We have briefed them. So when it bounces, we'll take them on their penalties and interest involved. This is also accumulated over a period of time. Period about 2 years, yes, or more.
The task force believes the effort is yielding the desired result in closing the revenue gap for the year.
Now, even though the outlook for Ghana remains favorable, with growth expected to increase from 6.3% in 2018 to 7% in 2019 and will average around 5% over the next few years, our debt level is said to be rising very fast, pushing the country into highly distressed level. Government debt is expected to increase by 63% by the end of 2019. Something investors are worried about, but with the government set to issue another Eurobond in January 2020, we explore some teething issues in our debt in Philip Namfuri's report.
Size of an economy's public debt always raises debate among citizens. Issues of stock debates don't only relate to the size, but which governments increase the debt the most and the best way to reduce it. In a recent interview with Bloomberg, Managing Director Kristalina Georgieva of the International Monetary Fund disclosed that the fund is worried about rising debt in Africa, with about 40% of countries on the continent at distressed levels.
One has to always remember debt on its own is not bad. It is bad when it goes for the wrong things and when it goes with the speed that the economy cannot handle. Again, it really depends on country circumstances. But are we worried about debt levels in Africa? Yes, because about 40% of countries have gotten to debt distress levels.
Debt levels of African governments have increased rapidly since 2009 as they took advantage of the need to provide higher returns as the world was awash with low global interest rates. Ghana, a nation in West Africa, is no exception. In 2007, we burst onto the scene with our maiden Eurobond issuance, and since then, we have become part of the system of international borrowers. Ghana's debt now stands at 208 billion cedis, with the share of commercial borrowing such as Eurobond issuances increasing. Remember that the days of access to concessional borrowing has thinned and commercial borrowing holds sway because we are said to have become a lower middle income country. This simply means Ghana is seen by development partners as one that can raise enough revenue to take care of its developmental needs. In all this, One important thing to note is that commercial creditors may not be forgiven as the multilateral and bilateral creditors, as we experienced with the HIPIC and other initiatives. As the Minister for Finance, Ken Ofori-Atta, prepares to go on a roadshow in January with the expectation to raise some $3 billion in Eurobonds, for us here at Joy Business, going with the numbers, we will say our authorities may need to work harder to ensure sustainability in our debt so we don't burden generations unborn.
Has been touting the city's performance at the MPP's delegates conference held Sunday. He says government has a grip on the city despite the fact that it continues to depreciate. He's been making a comparison with the performance of the previous government led by John Mahama.
Inflation is on the decline, about half what it was when we came into office. Interest rates are on the decline, and exchange rate depreciation has been tamed. I know our opponents want to say that we have not managed the exchange rate well, but they just are not reading the data. If you look at the data, you will know that the government of Nana Addo Dankwa Akufo-Addo, when you look at the annual average depreciation of the city, since 1992, our government is the second best performing. The first is the government of President J. Akufo during 2005 to 2008. So we have seen an average annual depreciation of our currency of 8.7%. When NDC was in power between 2013 and 2016, average annual depreciation was 18%. We had 8.7, you have 18%, and you are telling us we cannot manage it well. You must be joking. You must be joking.
The Vice President there, we are entering into an election year, and I bet that the city's performance will be one of the key campaign issues as far as the economy is concerned. You heard the Vice President say the exchange rate has been tamed under his government, but what are the facts? Joining me in studio is Joy Business researcher Philip Namfori. So it should be difficult to say, or it should not be difficult rather, to say who is managing the economy or who managed the city better or not, should it?
Darryl, thank you very much. Like I always say on various discussion platforms we have here in JoyNews, I, for one, given my background, what I've learned and where I've been, I stay clear of these political discussions when it comes to the economy. I like to look at what's going on the ground. And as an economy since Nkrumah's time, and even before Nkrumah's time, nobody has significantly altered the structure of the economy. So we are still importing, we are still exporting less. Gold, cocoa, and recently we introduced oil. So the structure hasn't changed. Nobody has really fundamentally altered the structure for us to export a lot vis-a-vis our imports. So as to who has done better, I really don't...
But what do the data tell us?
Okay, so let me pick something from the Bloomberg terminal. I was discussing with our colleague Novana Akwa-Hayford. And somewhere in 4th June 2013, we hit 2 Ghana cedis to $1. Then over a period of 2012 to 2016, according to the Bloomberg terminal data, the cedi had depreciated by 55.48%. So that's over a 4-year period. Back in January 2013, we were at 1.91. Then we hit the 2 cedi mark in June 2013. Now, at the end of May 2014, that's when we entered the 3-point regime. Then at the end of May 2015, we entered the 4 cedi regime. And even in that time, we stabilized back to 3-ish and we went back to 4-ish. Since then, we've been on a downward spiral. I did something last week where I looked at a 5-year graph of the Ghana cedi, and it's been downward spiraling all along. And you look at what happens in the Ghanaian economy. Like I said, the structure hasn't changed. Bank of Ghana is the one in charge of managing the Ghanaian cedi vis-a-vis its relationship with other currencies. So sometimes when I hear people calling on the government, that's the Ministry of Finance. Ministry of Finance doesn't have hands over currency. It's Bank of Ghana's duty. However, if the minister decides to go for a Eurobond, opens up our market to foreign investors, and these foreign investors are recalling their bonds or are exiting our market, then there's an impact on the Ghana cedi because there's more dollar outflow vis-a-vis the Ghana cedi in the system. So Bank of Ghana is the one vested with powers to manage this. And they manage this by injecting funds or foreign currency onto the market when they realize that there's a need for them to do so. Proponents have said that Bank of Ghana shouldn't do this. We should allow the CD to fall to its real value. But the key question goes back to the structure of the economy. Till we start finding a way to, as we said from the time we're in JSS, add value to our exports. We've learned this and learned this and learned this and learned this. If we don't do that, we'll continue having these debates about CD depreciation.
And just to add, it may be unfair to do the comparisons because the situations differ, right?
Exactly.
I mean,
so
we talk about external factors that could influence the city's depreciation.
And let me just cut you here. From 2012 down to 2016, and I'm not doing any government specific, I'm looking at the global factors. Commodity prices, of which our economy is based on, suffered. Oil suffered, gold suffered, cocoa suffered, and it had concomitant effects on the economy. These commodity prices rebounded again in subsequent periods. So sometimes it becomes difficult to play the party game. That's why I always say, let's look at the broader economy. Let's look at the structural issues which we need to fix as a people, not as one government or the other.
And finally, there's some school of thought that it's pretty normal to see the city depreciate in the months leading up to the election. Obviously, as you're seeing it happen right now. So is that the trend?
Yes, because so let's just do now. People have brought in the items they are selling. Next year will come, we'll have companies declaring dividends, etc. Those with foreign shareholders will have to repatriate their profits. If things don't go well in the year 2020, when we have the bond investors, about 40% of our bonds are held by foreign investors. These Franklin Templetons, etc. If they decide to cash out, they are taking their money in foreign exchange. And that will mean funding it with Forex. And obviously there will be effects on the local currency. So you realize that, yes, these things will continue happening, but we need to find ways to ensure that there's more Forex within our system. We can't continue depending on Eurobond issuances, cocoa board syndicated loan, stuff like that. So it's all back down to the structure.
I can tell you what will continue, the politics about the city's performance. Thanks very much indeed, Philip Namfui, for your perspective in this matter. Well, Ghana's dream of having internet services brought to deprived communities to create smart communities is set to become a reality from January 2020. This is because one of the leading firms leading the Smart Cities project, ICT firm Celtel Networks, today got to the final stage of the process when it signed an MOU with ED & Co Capital Partners, an advisory fund management firm which will have the responsibility as transactional advisors for the $500 million fund for the project. The project will involve building a network that will allow Ghanaians nationwide to subscribe to one Wi-Fi internet network with access costs made unprecedentedly affordable through share economies of scale, country-specific engineering design, and installment payments by subscribers. Speaking to the media founder and chairman of Celtel Networks, Dr. Prince Kofi Klujasen, he said they were ready to even put up a factory to assemble new devices which will be affordable on subscription and flexible payment terms to enable many more Ghanaians own electronic devices.
The 1st January, we're going to be able to open up for most companies, franchisees in every district to apply. Those who want to be partners for every district. One of the things we are doing is that the first 1 million people, most of us that come from various villages and communities, like my village, for instance, we're going to identify almost about 200 to 300 teachers who are ready already. So wherever you are, by the time we finish, we are going to meet a lot of the ISP, operators, which we are meeting a lot of them already, who are all over the country. So we are going to partner with all of them so that we can kickstart, and we've designed so far about 20. Tema is one, Kumasi is one, Ablekuma, Kaswa, all those areas have already been designed to be able to kickstart. And once you got the protocol, engaging Mr. Communication, all the regulatory body, what needed to be done, once those things are sorted out, we'll roll. But the most important we've done so far is got all the consortium partners ready, financing ready, all the issues who are the bottlenecks, which we're able to, block, have already been done. And we just have to launch and finish the rest, and also partner. Luckily, government has a very good digital program already, and we'll be able to plug into that digital program, and whatever needed to be done, we'll do, and then we'll roll.
You're watching Business Live. Former President John Mahama is addressing the public on issues to do with the financial sector. We want to listen in.
All the the situation can be salvaged. It is only when you have nowhere else to turn that you resort to closures and revocation of licenses. The current revocation of licenses and closures has caused mass dislocation and has created very serious implications for credit financing of our small and medium enterprise sector. And it's going to take several years for us to climb out of it. I gave the example in the 1990s when we had toxic liabilities in most of our financial sector. What happened was the government of the day created what we call a bad bank and offloaded all the toxic liabilities into the bad bank. It was called the Non-Performing Assets Recovery Trust. And it cleaned out the balance sheets of the banks. It put in better regulatory measures. And then the bad bank went after the debts that it had inherited. And a lot of the money was recovered and it went back to the government purse. Now, as it is, 20 billion Ghana cedis is the debt of this clean out. And the taxpayer, you and I, have to pay this money. I believe that there's a lot that government could have done. For instance, the questions I asked, how much did government owe its contractors and suppliers? Which, if government had paid, will it have made some of the banks liquid enough to continue to operate? And the point you even have to ask is, how much did they owe each other? Because there are cases where microfinance companies owed savings and loans companies. There are cases where savings and loans companies owed banks, universal banks. How did we net off all these before going to revoke licenses? As it is, we are saddled with a fait accompli. And we need to see how this can be handled with regards to the impact that it has had, not only on the financial sector, but on the customers whose monies are locked up, on the staff who thought they had lifetime employment, but suddenly find that their employment is ended, on the staff who are being ejected from their rented premises, and who face serious dislocation of their lives as a result of the steps that have been taken.
Apologies about that. We'll bring you the former president's address as and when we have it. Now, Minister for Aviation Kofi Adda is objecting to the use of Kotoka International Airport Green Park for the construction of regular high-rise concrete infrastructure. According to the minister, the Green Park area should be maintained in line with the International Civil Aviation Organization's call for more sustainable and environmentally friendly airports.
The International Civil Aviation Organization in recent times is pursuing wide-ranging targets and initiatives to contribute to the global push for environmentally sustainable development. This includes the development of green airports and the use of airports land for eco-friendly projects. It is on the back of this, the Minister for Aviation, Joseph Kofi Adda, insists the airport's green park should not be exploited for the construction of regular high-rise infrastructure, but maintained for environmentally friendly developments that will still generate revenue.
ICAO has insisted that civil aviation authorities and the airports should maintain environmental friendliness. And that is one big island of a green patch in this part of Accra. I guess one can safely say that we're perhaps in one of the fairly rich zones. Airport, residential area, cantonments, Laboni, East Legon, there's no real green park. No park where the kids can go to play, no park where you can have some social active functions. I think that's been my dream, to make sure that it's transformed into a park that will be accommodating and will also be refreshing from an environmental side as well as a recreational side, and money making for people as well. But not a site where people just come and put up buildings, concrete and steel structures, and block everything, and the wind will not be flowing.
The minister added expansions are also underway at the airport to make room for the anticipated growth in air traffic.
If you go up northern side of where we stand now, you'll find construction going on for the northern apron, which is what Ghana Airport Company has taken the lead to try and do. I think the numbers go between 8 to 14 aircraft, depending on the type of aircraft will be able to park there. So we're already staying ahead. The International Civil Aviation Organization has predicted that there are about 24 airports in Africa, which within the next few years, we don't have enough space to accommodate aircraft. So Ghana has taken the lead on that. I think we're ready, and that's how we're going to encourage them to keep coming to Ghana.
For Joy Business, Sheila Tamaklo reporting.